what are capital gain bonds, and how to invest in it. That's what we are going to discuss today in the Market Secrets investment series. Before we begin, I have a request for you. In addition to this investment series, we have multiple other series on price action trading, algo trading, and trading strategies running parallelly. So if you are interested in any of it, check out our website www.marketsecrets.in. In addition, we have multiple data feeds as well. So if you are an active trader, check those out as well. And with that note, let's begin our discussion on capital gain bonds. Even though capital gain bonds are not strictly a subcategory of debt, these are bonds that are relevant to real estate investors as it is a way to gain some respite from capital gains tax. When you sell a real estate property, say a house, you're subject to capital gains tax. To avoid this, you can go for capital gain bonds. Please note, we will not go in depth into the exact details of how capital gains works in case of a property, but this section applies on all the gains after the brokerage, indexation, expenses, etc., which are subtracted from the sales price. So consider this capital gains amount as X. We need to pay capital gains tax on this amount X. To avoid paying tax, this final capital gains amount X can be invested in these 54EC capital gains bonds as a way to avoid the tax burden. To be eligible for this exemption, there are three key requirements. The amount you invest should be sourced from the gains you have from the sale of a property. The amount should not exceed 50 lakh rupees for an individual or 50 lakh per partner in a real estate business. Investment shall be made within 6 months of the date of selling or filing your IT return. Currently, three companies issue bonds under this category and you can invest in them through your bank. The companies are REC, that is Rural Electrification Corporation Limited, PFC, that is Power Finance Corporation Limited, and number three, NHAI, which is National Highways Authority of India. In addition to this, there are key details about these bonds which you should be aware of. Number one, as of today, all 54 EC bonds are AAA rated PSUs which are partially divested by the government. Number two, TDS is not deductible on the interest from 54 EC bonds and they are exempt from wealth taxes. Number three, they are issued with a lock-in period of 5 years. And lastly, minimum investment in 54 EC bond is one bond amounting to 10,000 rupees. So these are the details about capital gains bond. So this is specifically for an investor who had recently sold off a property, say a house or a land, and has capital gains. So if he want to reduce his tax burden or avoid the tax on this capital gains, then he can go for this capital gain bonds. And with that, we have come to end of today's episode. If you like this video, hit the like button and share it with your friends if you find it useful. Also, if you have any queries or comments about this episode, please leave it down in the comment section. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.